and right on cue, out on Drudge Report, Antioch, California may beat everybody else to the punch. They may be first up. That's where Hans is from, by the way, one of our buddies' hometown of Antioch. They list them in order: Antioch, Harrisburg, Detroit, and several other cities, all getting ready to file Chapter 9, the contagion, if you will, spreading everywhere.
Well, look at the whole state of California. I mean, they have, obviously, when Schwarzenegger came in there and he put together all these items that he wanted the state, the people of California to vote on, which was a conservative agenda, cut back spending, lower taxes, da-da-da-da-da-da-da, and they voted down all of them. I mean,
right.
He voted down all of them. So, Schwarzenegger's like, oh, okay, you want me to be liberal. So he pretty much became liberal, and they just spent. Now, of course, they got two choices, all right, really, the whole state, all right? Bring in another conservative, bring everything back down, cut it all to nothing, tax everything to death, or do none of the above, and then just have the federal government write them a check every year for the rest of our lives, and pick a liberal. Which do you think's going to happen? It's California, for God's sake. Fire all the teachers, shut down all the welfare.
Austerity measures in California?
Or
I think not.
Just have the federal government keep sending us a check every year to balance our budget. That's what's going to happen. You know it, and I know it. And ultimately, until we all look at it, and the government's $20 trillion, $25 trillion, $30 trillion in debt, so at one point, one of these generations, probably Joe's generation, who's now decided it's much easier to not pay your house, and you can still go out to the casinos and go out to dinner, and you can have a great life, ladies and gentlemen.
People think we're crazy when we tell you that millions of Americans are living completely rent, and I'll call it rent for lack of a better term, rent-free for a year, 2 years, 3 years, and going out and spending money on going to the casino and eating at the Outback. CNBC this morning, Alex Pemberton and Susan Rabaris, foreclosure is becoming a way of life. Something they did not want, but yet they're in no hurry to get out of. Apparently, foreclosure has allowed them to stabilize their lives. Now they get to go to Outback Steakhouse, take their gas-guzzling airboat out for the weekend, and visit the Hard Rock Casino. Instead of the house dragging us down, it's becoming a life raft, said Pemberton, who stopped paying the mortgage on their house last summer. It's really been a blessing. And, of course, the number of people who feel this way have continued to grow. And here's what the average is. The average borrower that is in foreclosure, which is something like, 7.1 million people. But the average person that goes 60 days late spends a total of 438 days. There's 365 days in a year. 438 days it takes on average for the bank to take your house back. So you get to have almost a year and a half rent-free. The worst state in the union, believe it or not, it's not Florida, it's not Arizona, it's not Nevada, it's not California. No, the state of New York, you New Yorkers, you have it the best because the average foreclosure in the state of New York is now taking 508 or 561 days.
I like that. Instead of the house dragging us down, it's become a life raft. And if you stop and think about that, this guy says this, if you got a $2,500 a month house payment,
right,
and you decide to, I don't know, maybe save that money instead of throwing it that way in interest, that, if you're able to live in a house, for 2 years? That's well over $50,000, right? 24 months,
60 grand.
60 grand. I can tell you right now in Arizona, you can buy a hell of a nice home in Phoenix for $60,000 cash.
But they're not even saving it.
I know. They're
going to the Hard Rock Casino in the Outback Steakhouse.
I like here it also says they're fashioning a sort of homemade mortgage modification, one that brings their payments all the way down to zero.
you nothing.
That is truly the no-interest loan, ladies and gentlemen. They have no interest at all in making the payments on it. But, yeah, again, that, of course, if they really – that's your number one expense in your life, and always will be, is housing. So I guess if you could just somehow take that out of the picture, imagine not making a house payment for a couple of years. Well, that's what's happening. And, of course, the banks, instead of – well, you and I are making the house payments for them because why they live there, ladies and gentlemen, of course, the TARP money that went to bail out the banks, and some of the bigger banks got to print some stock, and, and all the other banks,
and they snapped it up.
Right, all the other banks bought it from each other, and, of course, now all their income comes from trading stocks. But now, of course, as the Dow had its worst month, by the way, since 1940. Hello? Had its worst May since 1940. The bloom is coming off the rose of the great Wall Street recovery.
I want you to just put this in perspective. What is going to happen to the 7, and let's face it, the number keeps growing, 7, 10, 15, 20 million people who don't pay their mortgage? Eventually, at some point, they've got to start paying some rent somewhere. Eventually, they're going to get thrown out.
Well, 650,000 households haven't made a payment in 19, what, how many months is that? Oh, 18 months.
650,000 have already gone a year and a half without paying a cent.
They're still in them. You know, the ones especially, I'll tell you the lesson learned out here for you people that are out there thinking about trying to find a good default house. Get one that has an HOA fee on it. Because the banks won't take them. And the bigger the HOA fee, the longer you can live in them. I mean, we've got articles here where people are begging the banks, please foreclose on this. Why? Because you can walk away from the mortgage in Arizona. If you didn't cash it out and
but you don't have a second.
You can walk away and they can't do anything. They can't come after your deficiency balances. It doesn't even matter if it's an investment house. You put no money down, never lived in it. You can walk. You can walk from that house, and the bank has no recourse. The HOA fees, on the other hand, ladies and gentlemen, they will get from you. They will win in court. They will sue you, and
you will pay that.
So the banks know it. So the banks, by the way, there is a law in place, and I didn't know this, but I do now, that if you, from the first day you miss a payment, the bank, by law, must take your house back. You want to guess how long?
There's a law that says
they have to take it back.
At a certain point.
Nationwide law,
they've got to go get it.
They have to take it back. 6 years. So 6 years. Imagine, like, if you...
I want to know the first guy that makes it 6 years.
6 years without a payment. Well, I'll guarantee you, he'll be in a ritzy area, and there's lots of them. 2 or 3 years right now with a $1,400 to $2,400 a month HOA fee on his house.
Your dues.
Your HOA dues, yes. So, I mean, because the banks don't want that.
Right, because if the banks did it, they would be stuck paying the dues, right?
And trust me, the HOAs want them to foreclose because they know they can sue the banks and get the money. Well, maybe not for too much longer. The symptoms now are familiar. And again, I did the story last year up in the Pacific Northwest where they were writing how the real estate contagion was not going to affect Portland or Seattle.
Right. Because Washington State, no, we are invincible and immune to all of this.
Yes. And the very same articles they wrote here the year or two earlier. They're actually 2 years behind us. Of course, here they wrote, we have 80-degree days in January. Our real estate markets in Scottsdale will never fall because people come from all over the world and want to live here in the wintertime. That was 54% ago. And still dropping. But the symptoms now are familiar. Too many construction loans made when money was plentiful and real estate values defied gravity. And now the disease that has killed more than 200 banks is spreading to another part of the United States. 6 banks in Washington State have failed this year, while about 1/4 of the banks and savings institutions based there, get this, are operating under regulatory scrutiny.
Wait. a quarter,
25%.
have gotten well notices, if you will, from the FDIC.
Do you know what these are? This is brand new. This is Wall Street Journal weekend. They didn't figure anybody would read this.
Right, because the world was coming to an end or you're getting drunk on the houseboat.
Right. So we did none of the above for the weekend. I actually read this over the weekend. Anyway, the tougher regulatory environment, get this, is called a cease and desist order. 25% of the banks are operating with a cease and desist order. Now, this would make sense.
What does that mean? Now, to me, cease and desist means shut down.
Stop immediately.
Right. Whatever it is that you are doing, you need to stop it immediately.